Hello, my name is Tofpik. I am Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to bring you some foreign exchange charts to look at. I'd first like to look at the euro against the dollar. An interesting one this. I suppose yesterday's action could be classified as a long-legged, indecisive, spinning top. It could also be seen as a bearish harami, and I don't doubt that. I just favour the former as the extremes were nicely bracketed by the previously mentioned overhead resistances of the long moving average, currently 111.35, with the nearby 50% Fibonacci line of the June to October 2019 move at 111.44, whilst below we had the lesser Fibonacci level at 111.01 holding up prices. Nothing has changed the longer term overall pattern. We're still in between the overhead middle time, currently 111.96, and the lower time below, currently 110.61, and that's of the recent October-December 2019 bullish shift pitchfork. The next chart to look at is cable, aka sterling against the US dollar. A bullish harami of sorts yesterday. The market had dropped down to test the uptrend, or neckline if you like, from November today, and that's currently at 129.72. It had pierced it, but obviously did not manage to close below. Meanwhile, overhead, we still have the recent December 2019 to date downtrend. That's currently at 131.08. Finally, we're now touching the October to November 2019 congestion area. That's 128 to 129.5. This was the reason for the move back up after piercing the uptrend. Next one I'd like to look at is euro against sterling. An interesting bearish harami yesterday. The peak was contained by, and I quote, the December high at 85.94. Beyond that, we have some October-based resistance concentrated in the 86.15 area to 86.40. And the end of quote. And the resultant move back down dropped and closed below the interesting 38.2% Fibonacci level of the 2006-2008 move at 85.52. The market finished resting on the old, broken, but seemingly still effective upper time, currently at 85.36, of the bearish August to October 2019 shift pitchfork. That's been running this market so effectively since October last year. Today we're capped by the 38.2% Fibonacci level and below by the broken upper time. This still could be a major shift. Just watch the closes over the next few days. The next one I'd like to look at is the US dollar against the Indian rupee. A bullish opening white Mariboso to match and mirror the previous session's closing black Mariboso. We may well have the beginnings of a base being built here after all the bearish moves last week. Today the market moved up towards the first significant resistance overhead, and that's the middle time, currently 71.05, of the September to November 2019 Andrews pitchfork, and immediately shied away at this stage. It wouldn't be that hard to confound yesterday's bullish move with a combined key reversal down and bearish engulfing pattern. Not saying it will happen, just that it isn't that hard to do right now. Finally, I'll once again note last week's bearish looking bow tie formation. It seemed that what initially looked like a bullish bow tie may be turning out to actually be a bearish bow tie after all. The moving averages evolved have turned lower. If this bow tie survives the market, then the kicking will be between about the 28th of January and the 4th of February. So watch this space and watch those dates. The next chart and the final chart I'd like to look at is the US dollar against the Brazilian real. A solitary bearish black crow yesterday, but with a new recent high and a second consecutive close over the medium moving average, currently 411.42, and also the important, very recent 50% Fibonacci line at 412.01. The reason I suspect for the pullback is the middle time, currently 415.67, of a newly drawn, very mildly bullish October 2019 to January 2020 shift pitchfork. It is coincident with the lesser, very recent 61.8% Fibonacci line at 415.70 right now, and the two together may have been enough. Beyond these, we're in fairly free territory overhead until we start reaching the highs back in August through to October last year, between roughly the 418 to 419.5 area. It'll be interesting to see what the market does today. Well, that about wraps it all up. So in the meantime, good trading.